Hey everyone, thinking about buying a townhome, thinking about buying a condo, or maybe you own one, you're thinking about selling it? Well, this video has important information for you. This is the market update for the Las Vegas real estate resale market for multifamily housing, specifically condos and townhomes. Every month I produce one of these videos, and I am Justin Miller with the Chong Miller Group. At the Chong Miller Group, we help people build wealth through real estate. We help people buy and sell houses, including condos and townhomes. This is the August 2023 market update, and in this video, I've pulled data as of August 7th. The data is looking backwards at what happened in July of 2023 with monthly comparisons to June of 2023 and annual comparisons to July of 2022. In these videos, first I look at condos. After I look at that data, I look at townhomes. So we talk about these two segments separately because they are distinct populations, statistically analyzably distinct populations of multifamily homes. Combining the data actually leads to a total misunderstanding of what's going on in the market. Sometimes these market segments move in tandem, sometimes they move disparately across the total of the data set, looking at supply issues and demand issues, pricing issues. There is differentiation that gets completely obscured, if not becomes misleading, if we don't separate these types of housing stock. So that's what we do here. We look at the one, we look at the other. Please smash the like button, hit the notification bell, subscribe if you've not seen these videos already, and please feel free to share these videos with family members, colleagues, friends, neighbors who you think might benefit from the content. With that, let's dive right in. Okay, condo pricing. What happened with condo pricing in July of 2023? The price of condos went up. They went up by 1.7% from $226,000 at the end of June to $230,000 at the end of July of 2023. We are on an annual basis, we're down because remember last year we had peaked for prices in May of 2022. We started coming down. We saw the bottom for prices about the end of 2022. In July of 2022, we were at $238,000. So we're down $8,000 on an annual basis, or down 3.6%. Now for comparison, back to single family homes, kind of interesting, single family homes on an annual basis down 3.8%. So we're very much in line. Statistically, there's not much difference there. We are seeing condo prices recovering at the moment at the same kind of pace that we see single family townhome prices recovering. So we're up month over month. We're down year over year, and we are headed higher. All right. What about the number of condos that were sold? In July of 2023, resale condos in the Las Vegas metropolitan statistical area, 330. This is down 0.1% or 3 condos from what we saw in June with 333. It is interesting to note that sales held up approximately flat, even though interest rates were spiking higher through the month of July. So that's actually an encouraging sign that buyers are out there really wanting to buy, even with prices going higher. Now we are down for sales. From 348, we're down 5.2% from where we were in July of 2022. And you'll remember the second half of 2022 was weakening and weakening. And so we're likely to exceed those 2022 numbers for sales on an annual comparison basis as we go forward in time from here. What about pending? These are contracts that are written that have not yet closed. Over the past couple months, I've started including pending numbers in the multifamily video as well. And so pending condo sales in July, this is contracts written but not yet closed, 334. That is down 1.2% from the 338, or down 4 condos from what we saw in June of 2023. So effectively, these numbers are flat both for sold and for pending month over month. Interestingly, however, we were up 6.0% from 315 pending condos, contracts that were written in July of 2022. So again, as I just suggested, last year's sales volume started really falling off, and we're probably about to cross that. Well, we have crossed it on a pending basis. We're now up on a pending level, up 6.0% from what we saw last year. So what does that actually mean, right? Well, it means that we're flat on sales month over month. We're down on sales 5%, but we're up 6% on pending. So you could say we're basically flat on the demand measures for the economy over the past 12 months for condos. That's really interesting because it's true with higher interest rates. So if you go and you watch the single family market update for August of 2023, I talk about where we are in terms of carry cost on the housing product. And we've actually seen carry costs spiking higher than they had been during the peak in 2022. In fact, we're seeing them spiking higher than where they had been during the peak in 2006. So we're seeing monthly carry costs going higher, and we're seeing demand holding up, right? It's not running away right now because we've got these high costs, but it's holding up. We're not seeing a deterioration in demand. And so that's actually really encouraging information on the demand side of the condo market. But there's another side to any market. You've got demand and you've got supply. What's going on with supply? Well, supply of condos, the number of condos available for sale at the end of July of 2023, 621. That number is down 6.5% from 664 that we saw for sale at the end of June. So supply's kind of dropping off, right? Even though demand is holding up, it's holding steady, supply is coming down. By the way, we're down 48.9% from the 1,216 condos that were available for sale at the end of July of 2022. That's a really big drop off. We are actually sitting now on a 10-month really strong downtrend in the number of condos listed for sale. The inventory numbers have just been plummeting. Supply is problematic, and we are below half of normal supply over the past decade, right? So if we look at supply numbers month by month, year by year over the past decade, we've got less than half of what is normal supply in this market. So of course we do get newly listed resale condos, and that helps us replenish the supply. Well, how does that number look? 391 condos were listed for sale in July of 2023. That's down 5 condos, not very much, but it's down 1.3% from 396 at the end of June that we saw come in June of 2023. We're down 40.9% from the 662 that we saw coming into the market in July of 2022. So we're not getting help from new listings. We're just sitting on very low inventory that keeps going down. And you know, inventory being down 6.9% or 6.5% rather over this past month, that's still a pretty steep drop in inventory. We may start to level out here, but we're leveling out, if we do, at half of what we would normally expect in a market. And we're leveling out with sales that are looking pretty close to normal market. So this is problematic. It's fewer condos available to look at. It's fewer condos for buyers to be able to compete over. And we see the buyers are out there because sales are holding up, contracts are holding up, and they're doing so with increasing prices in an increasing interest rate environment. So on the demand side, strong. We're seeing strength. We really are. On the supply side, weakness. We're seeing too little supply, and there's reasons for that. There's structural reasons, there's transitory reasons, but we're seeing this drawdown in supply. Now, I will talk one more statistic for condos back on market, 160. This is 32.7% of all of the condo contracts that were written in July fell out. They collapsed. Those properties came back in the market or became rentals or were pulled off the market. Someone decided just to continue to live there. That's up a little bit from 32.2% in June. Doesn't matter. We've been sitting around 30 to 33%, a third of the condo market every month for the past couple years has been collapsing. Those contracts have been collapsing. It's not the market collapsing. It's not sales collapsing. It's contracts that are falling apart. They're collapsing. A lot of it's because of bad appraisals. That's the majority of it. I've talked before about the impact of bad appraisals and why bad appraisals lead to the collapse of the contract. You can go back and watch some of those videos. But just know this is happening. And so when you're thinking about selling a condo or buying a condo, you want to pay particular attention to those attributes of your contract that are more susceptible to causing failure. And you want to be talking to an agent like us, a very experienced agent with knowledge about how to protect a contract for the buyer and for the seller, because a failed contract is bad for all parties to the transaction. So again, I am Justin Miller with the Chong Miller Group. At the Chong Miller Group, we help people buy and sell homes, including condos and townhomes. If you find this information helpful or useful, please feel free to share it with anyone you think might benefit from it, and smash the like button, hit the notification bell, and now let's go on and look at townhomes. Now, the townhome space, again, it's differentiable from the condo space. It's statistically distinct. These may sometimes look like the same type of housing product, but it doesn't matter. They're actually categorically separate, and so they move in different manners. And so we see that the median price on a condo is $230, but the median price at the end of July on a townhome is $325, so $95,000 higher, almost $100,000 higher. That number is actually down $2,000 from $327 that we saw at the end of June. Now, I'll just comment that we are actually up 1.6% from $320,000 that we saw in July of last year. Now, for the condo space, we're down 3.6% year over year. For the single family home space, we're down 3.8% year over year. For the townhome space, that's now flipped and we're up 1.6% year over year. The townhome space is the first area of the market to have recovered on an annual basis. Now, I will comment that the townhome pricing model has been a little bit different than all of the other segments of the market over the past year. So where we peaked in townhomes, condos, and single family homes in May of 2022, townhomes came down pretty steeply in June and July. And we've been approximately flat since July of last year in the townhome space. Condo prices came down more slowly. Single-family homes came down more slowly as well, and so we've recovered now significantly. But we our comparison is not like, hey, a whole year we've been back here at this level. Rather, we're recovering off of not a deeper deficit from the peak, but rather off a deficit from the peak that was put in later. And so that means the recovery has been pushed out. Townhome prices effectively recovered starting in August of last year, because we had in July sort of put in the bottom on townhome prices. So we're up annually, up 1.6%. Interesting and definitely different than condos. Now, what about sold townhomes? This is interesting, 228. That is down 12.6% from 261 that we saw in June of 2023. We're down 5.0% from the 240 that we saw in July of 2022. So we're actually sitting around normal sales for the time period 2009 to 2020 for townhomes, but we are down month over month, and we are down year over year. Now, in the condo space, where we were basically flat on the number of contracts written as well as the number of units sold, in the townhome space, we're talking about $100,000 higher price point, and we're talking about a price point at which mortgages are actually more common than they may be in the single family home space. And so the townhome buyer may be a bit more sensitive to spiking interest rates, as we've seen over the past 2 months. And so I think that that's what's actually taken a little bit of the wind out of the sails of the townhome sold numbers in the month of July. I think that as we see mortgage interest rates come down a little bit, we'll see some stabilization on that, and sales going back up. Now, contracts written, pending townhomes 248 in July. That's actually up 1.2% from 245, or 3 townhomes contracts that were written in July. We are up 6.4%, encouragingly, from the 223 contracts that were written in July of last year, when interest rates were a full point below where they are right now, which suggests that we're seeing demand being maintained in this market, even though we're hitting some resistance here as interest rates have peaked above 7% over this past, basically this kind of, starting in May, we saw interest rates hitting that 7%. In June, down slightly in July. We're back up at that 7%, 7.09% as of last week on the average 30-year fixed rate loan. So the numbers are not depressing in any manner. They're actually encouraging. The demand is holding up, and they're holding up as prices are also holding up in this space. But again, let's turn our attention to inventory and what's going on in the supply side of this market, because it's a similar story to what's happening with condos and with single family homes as related to supply. 379 townhomes for sale at the end of July of 2023. That is down 19.4% from the 470 townhomes that we saw listed for sale at the end of June of 2023. That's a really big hit. 1/5 of the supply has disappeared from this market in a 1-month period of time. This is a continuation of 10 months of really dropping townhome inventory. Now you may say, how can we be dropping at 20% per month and have been doing this for 10 months? Well, we had about normal inventory in the market around this time last year, right? So 10 months ago, this really changed. So we were building inventory last year. We had gotten to close to normal. Well, now we're sitting at something that looks like well less than half of normal, right? And we just keep eating through this inventory. It's being depleted month after month after month. 10 months of strong downtrend. We're down 52% from 789 townhomes that were listed for sale at the end of July of 2022. That's a stunning drop in inventory. And by the way, this is not symmetrical to the increasing inventory that we saw in the second half of 2022. This is a steeper drop than what we saw in increased inventory occurring last year, when there were a lot of people out there saying the whole market's collapsing. We're seeing tons of inventory come in. It's going to lead to dramatically lower prices. The dramatically lower prices never came. The increases in inventory were impressive, interesting, but they were not catastrophic. They never caused the pricing to really collapse in any kind of meaningful manner. We saw a pricing correction, that was it. And now we're seeing actually just plummeting inventory levels in this market. Almost everyone out there, even those who really have a lot of experience and recognize what they believed was legitimately going on, have miscalled the supply side of this market significantly. This is very much in line with the forecasts I was given in my 2023 market forecast video that I did in November of last year. Go check it out. I'd been saying, I was one of very few people who were saying inventory was going to go down significantly and we were going to end up in an inventory crisis in this market where there would be too few housing units, single family, condo, townhome, to satisfy the demand in this market. And that's what we're seeing. On the demand side, we're seeing demand having picked up, which I also forecast. On the pricing side, I suggested recovery, especially in the third and fourth quarters of 2023. We've just started the third quarter and we're seeing pricing recovery. So my forecasts have been correct, and you're more than welcome to go back and look at those forecasts. And they're correct because I understand what's taking place in the market. I'm looking at real data and I'm doing proper statistical analyses on the real data to be able to look forward in time about what's going on. And you may just ask, well, how can you look at activity from before, data that was generated from before, and see what's going to happen into the future? Because I can look at the different portions of the individually statistically cohesive markets. We've got cohesive markets in condos and cohesive markets in townhomes and in single family homes. And we've got the two portions of those markets, the demand and the supply. And when we see demand and supply working against each other, moving in opposite directions, that implies very strongly what's going to be going on going forward in time. And it's not about hype, it's not about driving fear, it's about making sure you're armed with appropriate information. And ideally, you come talk with us, but you certainly go and talk with a professional real estate agent to help you as a participant in this market. Whether you're a buyer or a seller, an investor, you want to make sure you're having someone who really knows what they're doing, how to put together transactions, protect you through those transactions. So moving on, down 52.0%. Townhome inventory year over year down 19.4%. Townhome inventory month over month. What about newly listed townhomes coming into the market? No help here. 254 townhomes came into the market, newly listed resale townhomes, in July of 2023. That's down 18.8% from the 313 townhomes that were newly listed at the end in the month of June of 2023. So again, we're down almost 20%, and this is 10 months into this problem with inventory. We're still dropping inventory. We're coming down on newly listed. We're down 41.6% on newly listed from July of 2022, 435. This is not helpful to inventory. This leads us to really be able to strongly forecast continuing declines in the level of inventory for townhomes. Similarly, more pronounced in townhomes, but similarly to condos and similarly to single-family homes, the townhome market is most impacted by this supply issue. And it's really why we've seen townhome prices stable over this past 12 months, where condo prices and single-family home prices had continued to go down for a while further. All right, back on market. 107 townhome contracts came back on market, failed. 31.9% of all townhome contracts written in July of 2023 failed. That is up. It's up from 28.9% that failed in June. Again, we're looking at this approximately 30%, 1/3 of contracts that are written are failing. In single-family houses, it's slightly less. It's between 25% and 1/3. In the multifamily space, it's running slightly higher than that, sort of 30% to 1/3. Contracts are failing. You need to make sure you understand why. You need to make sure you understand, because you're talking to people who know what's going on in this market and who know how to protect you from failed contracts. So again, please, if you find this helpful, useful, smash the like button, hit the notification bell, share this content with your friends, colleagues, neighbors, family, anyone who you think could benefit from this type of knowledge and insight into the market. And I look forward to seeing you in the next video. Thank you.